Good afternoon, ladies and gentlemen, and thank you in advance for joining us on our webinar this afternoon titled PRIIPs KIDs Solution. My name is Andrew Frost. I'm the Executive Director at Lawson Conner, and today I'm going to be joined by my colleagues Karen Foster, who's our Technical Director and heads up our PRIIPs and KIDs practice, and also Tom Miller, Director of Investment Management Solutions. I think as an agenda item and to lay out the plan for approximately the next 20 to 25 minutes, we're going to be discussing the PRIIPs and KID requirement for your funds by way of line items and an agenda. We'll look at the background and a high-level review of the actual regulation itself. And then we're going to take a little bit more of a deep dive into what the actual key investor document requires. When does it need to be produced? How often does it need to be updated? What are the biggest challenges around its production? And a solution that we here at Lawson Conner have been providing with a number of clients. I'll hand over to Tom to kick us off and paint the picture and give us a little bit of a high-level overview of the playing field that we find ourselves in currently.
Thank you very much, Andrew, and thank you everyone for joining. So as most of us here probably know, PRIIPs were introduced earlier this year on the 1st of January. PRIIPs was actually in the making for nearly 10 years, and the overarching ethos was to really support the retail investment community in order to be able to understand their investment opportunities better and also to compare investments across different products. It looks at areas such as risks, rewards, costs, and so forth via a document that one has to produce called a KID, a key information document. As I mentioned, the regulation came into effect 1st of January this year, and it has to be firms with funds who are targeting retail investors have to produce them. It is also worth noting that later in 2019, in December 2019, UCITS funds will also have to produce this.
I've switched slides now. I think just to jump in a little bit and by way of surmising how we'll run the webinar, what we found quite beneficial is incorporating the information for yourselves as listeners by way of a little bit of a meeting. So I'll be asking both Tom and Karen throughout the webinar questions, just like yourselves are sitting here in a meeting possibly. So Karen, can you run us through the 6 elements of a KID, which we'll then jump into in a little bit more detail?
Of course, thank you, Andrew. Good afternoon, everyone. So here we've got sort of an outline of a KID, and you can see that if you look at the overall document, it conforms to the scope of the regulation, which is quite specific in what does and cannot be included. We have at part 2 some narrative sections. Various parts of this can be personalised, and there are also sections that you must follow and have to be included. We have an identification of the target market, so we know that this will help retail investors, but here you can provide a little bit more colour as to what kind of retail investor you consider this to be appropriate for. In section 4, we look at costs and charges. So there's a disclosure there on costs, which we'll talk about a little bit later. At 5 is the risk disclosure. So we are giving this product a risk score between 1 and 7. And finally, if you look at the whole thing as a whole, it presents a summary of that product to your retail investor.
So I'll ask Karen now to take a little bit of a deeper dive into those various elements, starting with the narrative.
Thank you. So here we've got this would be the sort of the top half of your KID. It has to follow this order as per the regulation, so there's no moving certain sections above others, unfortunately. But here we have this sort of general information section, a description of your product. including the identity of the manufacturer and the regulator. And then you can go on to provide a description of the main features and the nature of your product, the objectives, how these objectives will be achieved, the target investor, and the term if there is one. Moving on to the risk section. This is telling your investor what they could get in return for their investment, and also how risky this is for them. So we have a description of the risk and reward profile by using a summary risk indicator, which is a number between 1 and 7, 1 being lower risk and 7 being higher risk.
Can I ask you a question on that one, Karen? The risk buckets and 1 through to 7, where do the various funds and investment strategies sit on that category? Yeah,
of course. So the output, the 1 to 7, is very much dependent on the data that's put in and falls under this kind of complicated methodology. Generally speaking, we've seen investment grade bonds score around sort of the 2 to 3. Funds listed on the London Stock Exchange tend to be a 3 to 5, and private equity usually 6 to 7, which kind of reflects the nature of the risk in those investments.
Thank you.
Next, we have the costs section. So here we are looking at the costs that are associated with an investment in this product. So the rules set out a methodology for calculating these and are broken down into one-off costs, recurring costs, and incidental costs.
And if I was to say to you, in your experience as heading up our kids practice, what are the top 3, I suppose, topics or issues that come up in your discussions with our clients around costs?
Yeah, so we have a lot of clients that their funds will be fund of funds, for example, and they want to know on what basis they have to look through on those costs. It's also working out how to ensure that your costs are comparable to competitors. So, for example, do we include stamp duty or broker fees here, or are they sort of an additional extra that doesn't need to be disclosed? And when there's a performance fee, how do we apply that performance fee so that it makes sense in the context of this whole document?
Thank you.
And this is the last section here. So this is your main narrative section, really, talking about how long the investor should hold the product for and whether or not they can take their money out early, how they can complain if they have an issue with the product. And this last section, other relevant information, is actually the only free text section of the kit. So you can put pretty much anything in there that you want to. We commonly see people explain that this kit is very prescribed, has followed a set methodology in line with EU regulation.
Fantastic. And Tom, if we move along to the next slide, perhaps you can share with us, a little bit of the practicalities around this production.
Yeah, thank you, Andrew. So I think the key area here is that the kit needs to be available in good time before transaction is concluded. Excuse me. What does that mean? Really, all the clients we see produce it and make it available before they start engaging with retail investors. And this is not just the funds and the managers, it's also the platforms where those funds might be marketed on. So that's the first challenge. I guess the second one is that people might overlook is the review. So if we look at the regulation, it says 2 main things. Kits have to be reviewed annually. That's okay, clear and easy to do. But where the challenge is, it also has to be reviewed and updated if there's been a 5% change on the moderate scenario, or if the risk score changes. And the only way of identifying this is to rerun it on a regular basis.
And if we've been running kids for our clients, how often do we see those changes, or how often do we see a need for them to be rerun?
Yes, that's a really good question, and a question we get asked all the time because most people think annually is enough. So we've done an analysis on our client base, and 1 in 4 kits we have to republish before the year. So within a year, we republish these on the platforms and to the clients.
I think it's also worth noting as well, there are a number of different investment strategies. We have worked with clients on a private equity, real estate, where you might have a NAV published once a year or twice a year. Or we have sort of liquid trading funds where you have a NAV published on a monthly basis. So we can factor in that timeline a little bit to our review process. If I ask Tom that you can lead on to the challenges in actually producing this document. We've got a great slide up now, and for the audience and listeners, I'm not sure how many of you actually popped the bonnet on the actual regulation, but I refer to it often as something out of an Albert Einstein academic textbook. Tom, perhaps you can run us through what goes into producing those numbers.
Yeah, so I think as we can see, the calculation is very complex, and what we won't do is go into that. But the challenge is to understand it, create the model systematically, and the overarching challenge is to identify the inputs in order to have the correct output. And that's probably where Karen and her team sit most when we're setting up and onboarding our clients, is identifying those inputs. I think Karen mentioned things like stamp duty, are they considered or not, and actually how you identify those, collate them, and then most important, as we said previously, is not good enough just to do it on a one-off basis. What is the framework and operating model in order to have an ongoing monitoring, review, and update process within the firm? How often do we do it? How do we collate this information? How do we look at these benchmarks? Where can we source them? Do we need to create them? And Karen would give a few examples later on, but those are the two main buckets. It's the creation, but also having a robust framework in order to having an ongoing monitoring program.
And I think one of the challenges that many of you on the line will have identified is the array of different scenarios that's going to play when producing your KID. Karen, perhaps you can touch on the various, I don't want to use the word challenges, but the diverse nature of the products in which KIDs are produced for.
Yeah, so I think if we look back at the KIDs that we've produced most recently, they sort of fall into three categories. So first of all, we've got those funds that haven't yet launched, but obviously they want this in place before they do go into that marketing and launch phase. So the biggest issue that they have is not having the required share price history. So what do? We work with them to come up with a benchmark or a proxy that is most representative of what their fund will do in the future. And we can use that as a basis for the production of the KID. We then have worked with bonds. Bonds without credit ratings are particularly difficult. And we sort of work with the clients and implement a sort of more of a Monte Carlo methodology to ensure that the scenarios are reflective of the nature of the bond and how that will look going forward. And I think the biggest challenge is for private equity funds. They don't have this historic data. Their NAV is very infrequent. We don't have the, sort of an appropriate benchmark even that we can work with from them. So we'll work with them to prepare best estimate performance scenarios, which are usually based on the modelling of the underlying asset, and the regulation allows for you to do that. So it's an interpretation to ensure that what you're producing is really reflective of what your product will look like.
Great. And Tom, we touch on a slide here, when it goes wrong. I just look at some of these numbers that we hear about in the press, in the regulatory framework, they're quite big. Indeed.
So not only are you going to lose money by not being able to sell these funds or distribute these funds to retail investors, you can see the first three bullet points. You might be prohibited from marketing, you might have to be suspended, you will require to publish a KID in very good timing. You're also going to have individual liabilities for 700,000 euros, and you're going to have company liabilities of 5 million or 3% of your total annual revenue. So these are serious, serious consequences by not producing them. And what have we seen? We've seen thousands of funds being pulled, for example, US funds who are trying to market to European investors, pulled from platforms. We've had conversations with closed-ended private equity funds who are not marketing but realize they have a retail element of investor base. You still have to produce a KID and make it available, as we discussed earlier on, in a good and timely fashion. The KID has to be available to your investor base if there's a retail investor there.
Great. What I'm going to spend a couple of minutes on over the next few slides is looking at the Lawson Conner solution for our KID and PRIIPs compliance. This is housed within Karen and her team, and I think the important element to focus on here is the time frame and your expectations as potential clients. We look at about a week from the time that we get the classification and the inputs through to the actual publication and distribution of your document is, call it 3 to 4 days. You get access to our secure online portal, which now allows you to feed through the narrative and upload the cost data. We have instant processing through to the actual production of the document itself. We can distribute that in PDF format post the approval through our team. Some of the example slides you see on the screen now is a snapshot of the portal itself. So that gives you an indication of the usability of our online portal. We refer to it as our KID engine. What sits behind that is 100% fully owned, developed software by Lawson Conner. We have a development team that maintains that and improves that on a daily basis, and you as a client get access to that to input your data. We also have the ability to upload complex Excel spreadsheets, or in a particular format that you house that information, we can pull that directly into the KID engine. And then in final, the output of that is essentially the document itself, which you can see on your screen now, focused over 3 pages and covering those 6 topics that Karen's touched on. I think the main intention being bottom left of page 1, assigning that risk category number, and then the performance and risk indicators on page 2. That brings us to the end of our presentation today on PRIIPs and KIDs. Myself, Karen and Tom, thank you very much for your time. You'll see our details, which I will leave on the screen for a number of minutes after we leave you. Thank you very much. Anything that you would like to ask, please contact either myself, Karen or Tom, who would be most obliged to come back to you in quick form. Many thanks once again. Goodbye.